14 fake tax forms. That's the detail that turns an ordinary Ponzi scheme into something stranger. A Columbus man mailed his investors official IRS 1099 INT documents, the forms that report the interest income you're supposed to pay tax on. The interest was invented, the money was already gone. And by printing the lie onto a federal tax form, he was betting that the paperwork itself would make it look real. This is the case of Tyler Bossetti. According to the Justice Department, dozens of his investors lost more than $11 million. Bossetti was 31 years old and he had an audience. He'd built a following on social media as a real estate guy, the kind who posts about deals, returns, and the lifestyle those returns pay for. His company had a name that matched the brand, Boss Lifestyle LLC. The pitch was simple and specific. Put your money into his real estate investment program and earn returns of 30% or more. 30%. Hold that number against reality for a second. A steady, well-run real estate fund might target high single-digit returns. A standout year might reach the teens. 30% advertised as a floor and paid out reliably describes no real estate return anyone can sustain. It describes bait. The social media piece is not decoration here. It's the engine of the whole thing. A cold-calling con man has to earn a stranger's trust one phone call at a time. An influencer starts with that trust already built. The audience has watched the videos, absorbed the confidence, and seen the lifestyle presented as living proof the strategy works. By the time money enters the conversation, the persuasion has already happened off-screen over months. So when Bossetti raised funds, the people sending them felt like they already knew him. That relationship did the work a cold pitch never could. And the money came in. Between 2019 and 2023, according to the Justice Department, Bossetti raised more than $23 million from investors across the United States and overseas. Sit with that figure, $23 million. That's the total that flowed into the program, and it measures how well the pitch worked. People do not wire money to a stranger's real estate fund from another country unless the marketing is extremely convincing. More than $23 million gathered from an audience that trusted the brand before a single dollar changed hands. Now the arithmetic, because every Ponzi scheme dies on arithmetic. If you promise 30%, you owe 30% whether or not a single underlying deal ever earned a cent. Real estate does not produce that on demand. So when an investor asks to see their return, where does the payment come from? From the next investor. New deposits fund old promises. As long as more money comes in than goes back out, the scheme looks healthy from the outside. The account balances people check keep climbing. The statements look great, but nothing underneath is actually being earned. Every payout digs the hole deeper because each dollar sent back out was somebody else's principal, handed over on the belief it was being invested. The scheme stays solvent only while it keeps growing. The day the new money slows is the day it cannot pay. Which brings us back to those tax forms. Most Ponzi operators dread the moment investors want cash out because paying everyone at once is impossible. Bossetti had an answer that doubled as a cover story. When investors asked about their returns, he told them the interest had been reinvested, rolled back into the program to compound into something even bigger. And to make that story official, he caused roughly 14 false 1099 INT forms to be issued and filed with the IRS. A 1099 INT reports interest income to the government. These particular forms told the IRS that specific investors had earned interest that was supposedly reinvested, when in truth those investors had earned nothing at all. The fictional return now had a federal document backing it up. It's worth sitting with how that works on two levels. For the victim, a 1099 is deeply reassuring. It's the same form a bank sends you every January. If the IRS believes you earned interest, then surely the interest is real and surely your money is still there earning more. So the forms kept people calm, and calm people don't ask for their money back. But those same documents did something else entirely. They put the fraud on paper with the federal government's name attached. Filing false documents with the IRS is a crime in its own right, wholly separate from defrauding the investors. The move that made the lie convincing also built prosecutors a second, cleaner case. Sustaining that for 4 years took constant motion. From 2019 through 2023, the program had to keep raising fresh money faster than it paid the old promises out. Each fake 1099 that convinced an investor to leave their interest in place bought time, because money left in the program is money that never has to be found. Every follower who reinvested rather than cashed out was one less withdrawal to cover. The tax forms did more than paper over the past. They bought time on the future, pushing the reckoning down the road one filing season at a time. Every Ponzi scheme ends the same way, on the day the money going out finally outruns the money coming in. When Bossetti's program collapsed, the damage was concrete. Court records show dozens of investors lost more than $11 million. Line the two figures up. More than 23 million raised, more than 11 million lost. The distance between them is the money that went to earlier payouts, to the lifestyle the brand was built to display, and to keeping the whole machine spinning long enough to raise more. $11 million simply evaporated, spread across dozens of people who believed a tax form meant their savings were safe. In June of 2025, Tyler Bossetti pleaded guilty. 2 charges. The first was wire fraud, the federal count that covers using electronic transfers to run a scheme. That charge is the Ponzi itself. The second was aiding in the filing of a false tax return, and that one is the 1099 piece. It matters that both landed in the plea. Prosecutors did not treat the fake tax forms as a footnote to the larger fraud. They charged them as a distinct offense. That choice tells you how seriously the federal government treats false documents filed under its own letterhead, even in the middle of a $20 million scheme. The sentence came down at 72 months, 6 years in federal prison. On top of the prison time, the court ordered Bossetti to pay more than $12.5 million in restitution. That restitution figure sits above the $11 million in documented investor losses, reflecting the fuller accounting the court ordered him to make good on. Whether the victims ever see that money is a separate question. Restitution is an order to repay. It is not a guarantee that the funds still exist to be repaid. For most people caught in a scheme like this, a number on a judgment is the closest thing to recovery they will ever get. The detail that lingers is the 1099. Fraudsters usually want less paper, fewer records, nothing an investigator can subpoena later. Bossetti went the opposite direction and generated official government documents to sell his story, and those documents ended up as evidence against him. There's a lesson buried in that for anyone weighing a return. Every reassurance that an investment is legitimate, the statement, the tax form, the confident brand on screen, is produced by the same person holding your money. The one number that told the truth the entire time was the first one, 30% guaranteed from a man on the internet. The math was the warning.